and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, April 4th, 2022, and I'm pre-recording this Trading Places Live for Tuesday, April 5th. Currently, we have futures. Of course, there's still a long way to go before the open. Currently, futures are down just slightly. Dow Jones futures down 38 points, S&P 500 futures down 4. NASDAQ futures down about 8 points. We had a pretty good day in crude oil. Crude oil was up to about 103, a little more than $103 a barrel. After hours, it's actually up a little bit more. It's now up at about the $105 area. We saw the 10-year Treasury yield close just a little bit below 2.4%. So still a lot of things to worry about, but the market's been keeping its head down, been pretty resilient and continuing to move higher. We're going to talk about that in just a minute. Let's go through the agenda for today. We're going to start off with the daily market recap. Then we'll get into talking technically. I think we'll go into scanning and strong AD. Strong accumulation distribution. We like to take a look at that at Earnings Beat, so we'll talk a little bit about that combination. Then we'll get into the earnings spotlight, and we'll wrap up the show with 3 you must see. Before we get into any of that, let me take you over to earningsbeats.com, where if you scroll down, you'll see we have an area right here to subscribe to our free Earnings Beats Digest newsletter. All it takes is a name, email address, hit that subscribe button. We do issue this newsletter 3 times a week, Mondays, Wednesdays, and Fridays. Normally it's out by about 8:30 in the morning, so we try to get it out about an hour before the market opens. Normally just a couple of paragraphs and a chart, very simple read. On Wednesday morning, the next subscription newsletter that we have out, we are going to be providing a potential short squeeze candidate. And one of our chart lists that we keep at Earnings Beats is a chart list of 39 heavily shorted stocks. And we are going to allow anyone that is on our list at Earnings Beats, anybody who receives our digest newsletter, to view the entire chart list of 39 stocks. And if you're a StockCharts member and you're an extra or pro member, you'll be able to download this chart list right into your account. So if that is of interest to you, then you want to make sure you sign up. All you have to do, go to earningsbeats.com, scroll down, and then sign up with your name and email address. We'll make sure we get that out to you. All right, let's talk a little bit about what happened in the daily market recap, the action on Monday. Dow Jones Industrial Average was up 103 points, S&P 500 up 37, NASDAQ up 271. So where the Dow was only up 0.3%, NASDAQ stocks were up almost 2%. Mid caps down 0.25%, and small caps down almost 0.4%. So this strength that we saw on Monday was very heavily concentrated in the NASDAQ, and you'll see it when you look at the sectors. Communication services up 2.75%. Consumer discretionary up 2.25%, technology up almost 2%. So these are the 3 aggressive groups. These are the reasons why we saw the NASDAQ so strong on Monday. This is where all the strength was on throughout the day on Monday. We did have, I think, energy finished up very, just a minor amount, fractional. And really there wasn't any other strength. So it was just a lot of concentration in many of the growth areas. We're going to talk about growth stocks in just a couple of minutes. Healthcare did not do well today. Utilities, so a couple of defensive groups that have been so strong of late did have weak days on Monday. Healthcare down more than 0.8%. Utilities down just a bit more than 0.75%. 10-year Treasury yield. First of all, really little in the way of economic reports. We had the factory orders out for the month of February. Of course, that's a report that's in our rear view mirror. The market, of course, looks ahead. So I'm not sure what a February factory orders really does for us. Market's not really too concerned about that. But it did come in a little weak. I think it was down 0.6% if I'm going off of memory. So I think the market was expecting a drop of 0.5%. I think it dropped 0.6, something like that. But market didn't seem overly concerned. You can see the 10-year Treasury yield, really not a whole lot of action. It was up 3.5, but you can see it really wasn't much volatility today. Not like what we've been seeing over the course of the past few weeks. So just kind of hanging in there. It seems like right now we've got 250 as kind of our overhead resistance area. And to the downside now, I would say the rising 20-day EMA, which is about 2.25. That is your range right now. And that's what I would be watching in terms of the 10-year Treasury yield. I would expect to see it continue to trade in that range. What's been somewhat discouraging, I guess, for the market, and I would expect it to bounce back soon. But with the yield rising, normally we see outperformance by financials. And look at what's been going on with financials, just falling off the map. And I'm not quite sure what to make of this, to be honest. I know banks are really struggling right now. And there's a lot of talk about, the inversion of the yield curve and the 2-year Treasury yield moving up above the 10-year Treasury yield. As I pointed out in my Trading Places live show over at Earnings Beats on Monday morning, I like to follow the 3-month Treasury yield versus the 10-year. To me, I think that's more indicative of the costs of borrowing at banks, the 3-month Treasury yield as opposed to the 2-year. And so I think that it's more important to watch the 3-month. And the 3-month, that 10 years actually been pulling away from the 3-month. So that yield curve has been widening. It's not been inverted. So it just depends on which one you're looking at. But I don't know if that's part of what's going on here. Is that the media, the focus is on the 10-year versus the 2-year, which has inverted, and that's getting a lot of folks maybe out of financials. I don't know, but I do know on the chart that financials not doing well, which is unusual when you see the yield rising. Something to keep in mind and watch as we go forward. Not a whole lot of economic reports out the balance of the week, by the way. Later on Tuesday, again, I'm recording this on Monday evening, but on Tuesday, we'll get March PMI composite out. The expectation there is 58.5, and March ISM services also expectation of 58.5. We'll see how they come in. Wednesday, the FOMC minutes will be out, and then Thursday, initial jobless claims, and that's it for the week in terms of economic reports. Very few earnings reports. So the market's left just to kind of trade off the technicals, and we'll see how that goes. Right now, the S&P 500 continues to trade nicely. We're seeing money rotate back into the growth stocks. And so I thought maybe that's, what we'll take a look at in talking technically today. So here we go. S&P 500, here's your uptrend. The last 2 days, so both, Monday and then on Friday of last week, we saw the S&P 500 close on its high, basically both days. So after a couple of weekdays, we've actually strengthened again here over the past couple of days. And on Monday, as I mentioned earlier, it was all about growth stocks doing really well. So trading above the 20, which is above the 50, we're in a secular bull market. You got to be careful betting against the market on the short side. I understand, just jumping in all in on the long side can be difficult, especially after a big rally like this. But we're in a secular bull market. So I wouldn't be tied to the bearish thoughts for too long. Could we go lower? I've been having this conversation, not just with our members and not just on the air, but with myself, trying to figure out, what's going on here. What are the chances that we're going to go back down again? I still think that there are signs potentially that we could have a recession somewhere down the road. I'm not married to that concept, so we'll see whether or not, how things evolve here over the next couple of weeks to a couple of months. But I do think it's possible. And if we start talking more about a recession, then maybe we do go back down one more time and test these lows. If we don't have a recession, I think I've said before, I said at the beginning of the year, and I'm sticking to my guns, I think we're going to top on inflation when the March CPI report comes out, and that's next Tuesday. So tomorrow's the 5th, Tuesday, April 5th, but next Tuesday, the 12th, we'll get our March CPI number, and we're going to see the core CPI annual rate spike again. And I think that could be it. I think that that could be the top on the core inflation rate at the consumer level. And if I'm right, I can only tell you what history tells us about the stock market. But once the inflation rate tops, that is normally an excellent sign for growth stocks, to get back into growth stocks. And so with that, I want to show you what's going on, or what we're seeing right now in the growth stocks. Large cap growth, big move up off of the March 14th bottom. You know, we did set this new low, went all the way back up, tested that early February high, pulled back a little bit, and then here was the day-to-day up almost 2%, large cap growth. I want you to look at the relative strength of large cap growth versus large cap value. So it's not just an absolute move to the upside, but it's also relative strength. And I really want to clear that late January high. We're right about on it. I don't know if we cleared it at the close today. If we did, it was barely. I want to see some follow through here, but that would be bullish. Now, if the market goes back down and growth stocks go back down, one of the things I'm going to be looking for is, do the growth stocks outperform the value stocks? Let's say the S&P 500, just for this exercise, let's say the S&P goes down one more time and maybe even moves slightly below. Let's say it gets down to 4,000 or 4,050, puts in a new low. One thing I'm going to be watching is, does the relative strength of the large cap growth versus large cap value hold that relative bottom? If prices go lower on an absolute basis on the S&P, do we see rotation on that move to the downside? Do we see the rotation moving back into growth at the same time that we're getting this CPI report out next week? That's going to be interesting. If sometime, later this month, we do take another move to the downside, that will be something I will be watching, not just with large cap, but also with the mid cap. Let's take a look at mid cap growth. Here's the absolute chart. So we got our double bottom in here around 8,200. Now we've come back up. We've put in this double top right here at about 9,350. Pulled back a little bit, trying to come back up again. Once again, there was your bottom on March 14th. And we're coming back up. Can we clear all of these relative highs? If we can, I think that's a pretty good bullish sign. So mid-cap growth, strengthening. Does it continue? And if we pull back, does this relative strength hold the recent low, relative low? Moving on to small cap growth. So this is the absolute price chart. You can see small cap growth all the way back to November. Down, double bottom. Now we're coming back up, right back up to this high that we saw in February. Can we get through? Once again, relative strength. Put in that bottom on March 14th. Moving up, but can we clear? I think all these charts look very, very similar. Growth is outperforming right now for the last 2 or 3 weeks, but can we clear key relative levels? And if the market pulls back, does the money continue to rotate and move toward growth versus value? All of these are things I'll be watching over the next, couple of weeks, 3 weeks, 4 weeks, just to see throughout earnings season, where's the money going? Should we be concerned for the summertime? Or is it going to be, coast is clear? We'll be getting some of these signals here over the next few weeks. All right. Another thing I wanted to mention here, I was talking about the bottom. If we do go back down, the S&P were to happen to go back a little bit lower and set a new low, I was talking about whether the growth stocks would hold their prior low, their relative low. That would be important. And if it did, I think that would be a really good sign about potentially getting in for the next leg up in the secular bull market. The reason I mention all this, I want to show you the growth stocks. Look at the end of the year. So the S&P 500 at the end of the year was setting, let's go back over here, S&P 500, here it is, setting a new all-time high at the beginning of 2022. But look at the relative strength of large cap growth. It was faltering. We topped at the end of November. See how this is going down? So the S&P 500 was going up into the beginning of the year. Large cap growth on a relative basis to value was going down. Mid cap growth versus value topped back in September, going down. Small cap growth versus small cap value topped in September, going down. So as the S&P was going up, we were seeing relative weakness in these areas, and that was part of the problem with the market. Now, could we see the opposite? Could we see the S&P go back down and set one more low with all of our growth relative strength charts not moving to new lows? That would be a really bullish sign and something we've got to continue to watch. All right, let's move on to, I wanted to talk a little bit about scanning and the strong AD chart list that we keep at Earnings Beats. So the first thing is, this is a scan that I ran, and you can come back in and look at this later. But essentially what I'm looking at is closing prices versus opening prices. So if you look, I'm looking for stocks where they closed today above their open today. Then they closed yesterday above yesterday's open. 2 days ago, they closed above the 2 days ago open. 3 days ago, closed above the 3 days ago open, and so forth and so on. But these are all and clauses. So they have to do this every day for 10 days. It's today, and then it's for each of the last 9 days. So that's a total of 10 straight days that a stock has to close over its open. I've got this set up so that it's going to be stocks. You know, we're looking at stocks. The exchange is either the New York Stock Exchange or the NASDAQ. And then I set up the daily simple moving average of volume. The average daily volume for the last 50 days has to be over 250,000. I wanted to get rid of any stocks that are not liquid. Now, if you notice here, I also did this as of 4 days ago. So I put in here starting 4 trading days before this close, before Monday's close. And the reason I did 4 days ago, if you go back and look at the S&P 500 chart, 1, 2, 3, 4. 4 days ago is when we had this run where we had gone up pretty much every day for about 10 days. And so I ran a scan to see what stocks had closed above their open for every one of those 10 days during that uptrend. And when I ran it, I got my results back. And if you put it in edit form, you can see how many actually were in this. There were 8. So 8 stocks in the universe closed above their open for 10 straight days. And so here, if we pull this up now in 10 per page, we can take a look at these stocks and the charts. So here's Apple. See all these hollow candles? That's how it met the criteria. That's what it has to do. It has to close above the open for 10 straight days. Apple did it. Now, the thing I like about these companies is that they were showing excellent strength. Most of these stocks should be looking pretty good on a relative basis versus their peers. And they should also show very strong AD lines. I mean, here you can see the AD line on Apple. Look at that move up. I mean, that is a straight line up. If you're closing toward the upper end of your trading range for that day, which closing above your open doesn't always guarantee that. You could have a situation where you open, here, have a big move intraday and then come back down and close near the low, but you just close a little bit above the open. So it's almost like a gravestone doji kind of a candlestick, if you're familiar with candlesticks. But so you can still have an open above the close that's not a strong AD candle. But most of the time, you're going to have strong ADs, and you're going to see this AD line moving up. So Apple was one of the 8 stocks. Let's look at the others. Axis Capital Holdings. AXS, look at this move to the upside. Huge move. Now, some of these, because I do think you're getting a lot of accumulation and you are seeing the AD lines move up on the majority of these stocks, I start looking for other technical areas. So here on Axis Capital, we had a high that was in, I don't know, 56 and change. And then we had these highs right around 57. And then we had this huge accumulation, took us up to 61. Any kind of a pullback down close to 57 would test the rising 20-day. So these are stocks that I would be interested in on pullbacks to potentially trade in the short term. Now, this was an interesting one, Claris Therapeutics. Now, it does trade over 250,000 shares, but it's only $1 stock. So it's not going to have a lot of dollar volume in it. That, for me, would take me out of the trade. And if you notice, recently we've had a lot of volume, which ups the average, but there have been plenty of days here where this stock doesn't trade many shares, and it's only $1 a share. So I would skip over it. That's just me. Dropbox, this is an interesting play. Off of this move here, you can see 3 excellent moves finishing near the highs of the day. And look, with the heavy volume, look at the AD line turning up. Then when we went back down, got close to a double bottom here, the AD line stayed higher. And now on this rally, we had 10 straight closes above the opens. We're now trading above the 20. We're getting that golden cross. And the AD line just recently hit the highest level probably in the last 3 or 4 months. So Dropbox, I think, starting to look much better. Iron Mountain. Look at these moves. Look at all of those hollow candles. Looks like accumulation to me. Look at that AD line. Very strong. Jobs, 51 Job Inc. It's a little bit more choppy, so you got to deal with the volatility, but looks to me like it's trending higher. AD line has been fairly weak, just starting to strengthen. It looks like right now it's at about a 2-month high. So I'd like to see that continue. So this one looks like it's trying to reverse its course and start to move higher. New Fortress Energy, NFE. Look at all those hollow candles. Very, very bullish. AD line just going straight up. Ping Identity Holding, another one. Look at all the hollow candles. Got some overhead resistance coming in near 30. So it's got a little bit of room to the upside. AD line soaring. Absolutely looks good. So those are the stocks that, from that scan. Now, we keep a strong a strong AD chart list where we go in and look at every sector and try to find stocks that have really strong AD lines. So for instance, there are 483 companies on this list. One of the companies is Alcoa. And if you pull up Alcoa, really nice chart, look at the AD line. That is just a super AD line. And that tells me if the stock's down intraday, a lot of times it bounces back. If you look back over the last few months, how many big red candles do you see? Not many. Look at this right here. This day on the 20-day, intraday, it would have been down about $6. And it came all the way back up, or it might have been down $8. Came all the way back up to $90. Probably got 6 of those $8 back. So these strong AD stocks, a lot of times you can look for early morning or even late morning weakness. And many of these stocks will rally back into the end of the day. That's how they get the high AD lines, the strengthening AD lines. So another one would be like Advanced Auto. This stock's actually been going down, but look at what the AD line just did. Here in March, it went up and set a new 52-week high on this move to the upside. So it looked like it was starting to roll back over, and then all of a sudden, look what happened today, Monday. Big move up, stock up $4.50. I wouldn't be surprised to see this one break back out above 216. That would be a nice move there. But anyway, 483 companies on this chart list with strong ADs. So we do a lot of that research for our members. All right. Next up, I wanted to talk a little bit in earnings spotlight about the banks, because the banks are going to be reporting in just another 10 days or so. Things will get started. And so I thought I would just take a quick look at some of the big banks that will report to see which ones we should be thinking maybe, just maybe, they'll be the leaders when they come out with their reports. They'll report, maybe better than expected results. JP Morgan is not one of them. Look at the AD line, still going down. Relative strength has just started to turn up, but overall it's well off its 52-week relative high versus its banking peers. That was set all the way back in early October. It's been downtrending since. Like I said, we're starting to see a little bit of relative strength versus the banks, but the banks have been horrible. So JP Morgan, I don't know, a little skeptical there. How about PNC? PNC, AD line moving down. Relative strength, yeah, it's okay. There was the high back at the end of January. Pulled back, kind of going sideways right now. So we'll see, how PNC comes out. I'd give them maybe a B. I would probably give JP Morgan maybe a D grade going into earnings. PNC a B. How about Citigroup? What kind of grade are we going to give them? AD line, not very good. Price action breaking down. Volume trends horrific. Relative strength versus the banks awful. So banks are going down and Citigroup's going down versus the banks. This is a really bad looking chart. I'm going to give a failure, an F grade to Citigroup. Bank of America. So Bank of America, double top there, came back down, hit this bottom over here, held, kind of going sideways. Relative strength, maybe a little bit stronger than PNC. So I'm going to say of all of these, AD line, not very strong. I'm going to say maybe a B plus for Bank of America. And I'm ranking these in terms of grades versus each other within the banking group. None of these charts look particularly good right now. And then one last bank, we'll take a look at Wells Fargo, because this has been one of my favorites. AD line's a little bit stronger than the others, but it too has not been great. It's more sideways throughout the last year. Price action mostly sideways. Relative strength might be a little bit stronger than both Bank of America and PNC. So I'm going to give Wells Fargo maybe an A minus. I think of the 5 big ones, the 5 big banks that'll be reporting here pretty soon, I think Wells Fargo might be the best of the bunch, slightly over both Bank of America and PNC. All right, 3 you must see. Let's wrap this thing up. I am going to first give you Tesla. Tesla came out with an announcement today that they disclosed that they have an over 9% stake in Twitter. And so Tesla was already hot. Look at the AD line on Tesla going up. Look at the price action going up. Look at the 20-day over the 50. We got that golden cross a week and a half ago, 2 weeks ago. Very, very nice action. How about Tesla relative to the autos breaking out to new highs? You've got one of the best stocks in the market with Tesla. So Tesla continues to lead the auto group. It's got a strong AD line. It's moving back up. Only got about 100 points now to go, get back to that all-time high set back in early November. Tesla remains strong. Twitter. So Twitter, if we look at Twitter here, breaking out on that news today that Tesla has a over 9% stake in the company. Twitter was already starting to trend higher a little bit, but that was a really big move. Look at the volume on Twitter today. 269 million shares. If you look back, only 3 days in the last year have we been over 50 million. Not once over 100 million. Today, 269 million, and we closed well above the open. This looks like accumulation to me on Twitter. Could we pull back? Sure. I think if we continue to go up in the short term, then today's open, which was 47.87, to me becomes a very significant support level. Now, if we go right down tomorrow and we can't hold that level and we take out yesterday's low, then it's going to give more of an appearance of maybe we go back and fill that gap. But if we go higher from here, and the volume will probably still be strong for the next couple of days, if we can keep moving up with that kind of volume, then I think today's open becomes very, very important here. All right, last one I'm going to bring up is just Netflix. Netflix, I saw today broke back up above the 50-day, first time since back in November. Just wanted to mention that volume was picking up a little bit. I think Netflix is starting to look a little bit better here. All right, that's it for me. Everybody have a great day, and I'll be back Wednesday for your next Trading Places Live. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.